Coming to various provisions that are relevant for accounting purposes and are mentioned in a partnership deed. Now, the first provision that we have to look out for is profit sharing ratio. Profit sharing ratio. Now, students, since partners have contributed something mutually to run a business, they expect certain returns. So, the returns or the profits generated out of the business would be based on the ratio that they have agreed upon. Then, interest on capital. Interest on capital, when mentioned in a partnership deed, would be allowed to the partners as what is mentioned. And in case partnership deed is silent about interest on capital, no interest on capital would be allowed. Then we must look out for any special remuneration payable to a partner in the form of salary or commission. Some partners might have entitled and negotiated their salary or commission for any special work that they do, and that would have been written in the partnership agreement. So you have to look out for any such arrangement. Then interest on drawings, if it is there and allowable under the partnership deed. Then we have any interest on advances, that is any commission or any loan or any sort of advance that a person or a partner in particular has made towards the business or to the business. Like, let's say a partner A has given a loan to a business, then what would be the treatment of interest to that loan is clearly mentioned in the partnership deed. You must look out for any such arrangement. Now students, there arise a peculiar situation, that is, in case any or all of these items are not mentioned in a partnership deed. I mean, there is an agreement, but it either fails to touch any one or all of them, and the agreement contains other terms and conditions. So what about these effects? Remember, it is very clear in Partnership Act clearly says that the deed, if it is legal and valid, is supreme. That is, whatever the partners have agreed upon should be given due preference. But in case partnership deed is silent about anything, then the Partnership Act will take over and whatever is mentioned in the Act would be considered. Okay, I'll just repeat that. That is, in case the partnership deed mentions something, then it has precedence over the Partnership Act, and whatever is mentioned in the partnership deed should be given due weightage and should be duly considered. Whereas in case partnership deed is silent about certain thing, then whatever is mentioned in the Act should be taken into consideration and account should be prepared on that basis. So now students, let's say in the absence of partnership deed, how we'll treat these items? That is, absence of partnership deed. In case partnership deed is not there, then the profit sharing ratio of the partners would be equal. Interest on capital would not be allowed. Then any special remuneration, it is not allowed. Interest on drawings, not allowed. Then any interest on advance, that is interest on loan also, as per Partnership Act 1932, this interest should be allowed at 6% per annum. That means if the partnership deed says that interest is not to be allowed, then remember, interest will not be allowed. In case partnership deed says that interest is to be allowed at, let's say, 10%, then it will be given at 10%. But in case partnership deed is silent about interest on loan advanced by the partner, then that partner is entitled to interest at 6% per annum.